Let's bring in Jacob Walthour, co-founder and CEO of Blueprint Capital Advisors. The asset manager fund works with both institutional and private investors and provides small loans to companies in duress, as well as managing public pension funds. A very good afternoon to you, Jacob. Thanks for joining us. Do you think we're past the peak of bankruptcies, or just getting started?
Absolutely not. We feel, for a whole host of reasons, that we're just at the beginning stages of what will be a real bankruptcy cycle. And when I say a real bankruptcy cycle, I mean a broad-based bankruptcy cycle that includes multiple sectors. Obviously, over the course of the last few years, we've seen bankruptcy cycles affect things like oil and gas or the energy sector. Now we think that COVID-19, the pandemic that we're experiencing, is having an impact on, roughly 94 to 95% of businesses across industries. And so we definitely think that there's more to come.
And so, Jacob, you say it's going to be across sectors. Are there any other themes, apart from simple points of over-indebtedness, that you are wary of in terms of where the bankruptcies are likely to be focused?
It'd be easier to answer the question of what sector am I not concerned about, and that'd probably be IT and IT services. As people are forced to shelter in place, you're going to rely more on technology to transact business, whether it's for you as an individual or whether it's for an actual business. We think that, for example, outside of retail, the transportation sector is going to get hit hard. People are obviously not traveling, and as we start to experience this wave of a rise in the pandemic throughout the South, you're going to have more and more travel restrictions, certainly outside of the U.S. as well as inside of the U.S. We're concerned about the healthcare sector. Obviously, since this began, the number of elective surgeries has fallen precipitously as there's been restrictions on elective surgeries. And so that's another sector that we expect to experience some pain. We're very concerned about the commercial real estate sector. Post-COVID-19, we're not sure that everybody is going back into the central business district, where they had their operations pre-COVID-19. And so that could lead to significant weakness in the commercial real estate sector. Certainly, transportation, looking at things like airlines, that certainly concerns us a little bit as, traffic, is significantly fallen off for the airlines. The last segment I would say we're particularly concerned about, obviously, is gaming and casinos. When you have these social distancing restrictions, it really doesn't lend itself to how some of these casinos are set up, and obviously that could cause real pain in that sector.
It's kind of a mind-bogglingly long list of areas of concern, Jacob, and we report on these stories every single day on the updates that we're getting from the companies. I feel like that the broader investment community isn't really focused or concerned about the bankruptcy question, and politicians too, for that matter, especially on retail. Why is that?
Well, I think that for the most part, the industry focuses on the largest companies in each of these industries. And very often they don't focus on the smaller and mid-sized companies in these industries. The largest companies in each industry usually have the best margins, and they certainly have access to capital. You take the small and mid-sized companies, and you start to see pain at that level a lot sooner. They are not necessarily the best customer for a large bank that has a balance sheet to give to a company that's experiencing distress. Very often they have to go to non-bank lenders where they're paying higher interest rates. And so we think that you'll see more pain in small and mid-sized businesses before you necessarily see it in the larger end of the market, because simply those financial institutions that have chosen to focus their balance sheet are focusing it on their largest and most profitable clients. But, from our perspective, we're a non-bank lender. We focus on companies that can't necessarily access the equity and debt capital markets. And there, we're seeing pain across the board. And the number of conversations that we're having around liquidity management and expense rationalization, pretty much takes up our whole day.
Wow. Jacob, thank you for joining us with that color. Something we'll be watching. Jacob Walthour.